Analysts are already on edge. The charts are whispering a new trend. And somewhere in the background, a massive wallet just made its move. What is happening with Shiba Inu? Well, the bullish cross that everyone was waiting for has officially died. The market is in a state of shock as the breakout nullified. But what does this mean for your bags? Let us break down the latest data now. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the crypto industry, subscribe. To get more Shib news, be sure to click the like button. Please note that by the time you see this video, some rates may have changed. Financial advice is not included in this video. According to reports from Shiba Inu has entered a critical juncture in its market cycle as of December 2025. For the past several weeks, the community has been closely monitoring a potential technical breakout that promised to reverse months of stagnant price action. This matters because Shiba Inu remains one of the most widely held assets in the retail sector, and its performance often serves as a bellwether for the broader meme coin market. As per on-chain data, the expectation was built on a series of higher lows that suggested bulls were finally regaining control. Furthermore, the broader macroeconomic environment has created a perfect storm of selling pressure. Analysts note that the current situation is a fundamental challenge to the token's recovery narrative. Sources suggest that the failure to hold key support levels has led to a significant shift in sentiment, moving from cautious optimism to outright concern. Community trackers show that while the ecosystem continues to develop, the immediate price action is being dictated by technical failures that have left many long-term holders questioning the next move for this decentralized project. The main development today, as reported by analysts is the official nullification of the bullish cross on the hourly and daily charts. Just a few days ago, Shiba Inu printed what appeared to be a golden cross, where the short-term moving average crossed above the long-term moving average. This signal typically triggers massive buying interest, but this time, the momentum evaporated almost instantly. According to reports, the price weakness has been so persistent that the moving averages have already flipped back into a bearish configuration. Furthermore, a more ominous signal has emerged on the weekly time frame. Analysts note that Shiba Inu has just completed its first ever weekly death cross in 2025. This rare technical event occurs when the 50-week moving average drops below the 200-week moving average, signaling a potential long-term downtrend. As per on-chain data, this technical failure coincided with a complete halt in the token's deflationary mechanism. For the first time in recent history, the burn rate has plummeted to absolute zero. Sources suggest that only 552 tokens were sent to dead wallets in the last 24 hours, a staggering decline from the millions of tokens usually removed from circulation daily. This combination of technical breakdown and fundamental stagnation has created a narrative of growing price weakness that is difficult to ignore. Market data from and shows that Shiba Inu is currently trading at approximately 715 units. This represents a significant retracement of around 6.7% from the recent high of 766 units reached just last Friday. The price action has been characterized by a series of failed attempts to break through resistance, with each rally being met by aggressive selling from large-scale participants. Analysts note that the token's inability to sustain an uptrend is a clear sign of exhaustion among buyers. Currently, Shiba Inu maintains a market cap of over $4.2 billion, which keeps it within the top 40 cryptocurrencies by valuation. But the downward pressure is mounting. The 24-hour trading volume is hovering around $210 million, reflecting a lack of conviction in the current price levels. As per on-chain data, the token has slipped below its critical support at 720 units. If the price fails to stabilize around the current 715 units, the next logical target for bears is the weekly support zone at 600 units. This would represent a further decline of nearly 15% from current levels, a scenario that is becoming increasingly likely. Technical evidence provided by analysts and paints a sobering picture for Shiba Inu. The Relative Strength Index, or RSI, is currently flat at approximately 34.53, indicating that while the asset is approaching oversold territory, it lacks the necessary momentum to spark a meaningful rebound. Furthermore, Shiba Inu is currently trading well below its major moving averages, including the 20-day, 50-day, and 200-day exponential moving averages. This alignment is a classic indicator of a sustained bearish trend. On-chain data confirms the dire state of the token supply-side dynamics. The burn rate, which is often cited as a key catalyst for long-term value, has effectively crashed to zero. Community trackers show that the lack of transactional activity on the network has led to a situation where almost no tokens are being removed from the circulating supply. This is further detailed by. Additionally, exchange flow data suggests that while some retail investors are holding firm, there is a steady stream of tokens moving from private wallets to centralized exchanges, often a precursor to further selling. Analysts note that the combination of a weekly death cross and the failure of the hourly bullish cross suggests that the path of least resistance for Shiba Inu remains to the downside. Expert commentary from market analysts suggests that the implications of this failed breakout are far-reaching. According to reports, the nullification of the bullish cross indicates that the market is not yet ready to support a higher valuation for Shiba Inu. Analysts note that the current price weakness is a reflection of a broader, risk-off sentiment that has permeated the entire cryptocurrency sector in late 2025. The failure of the technical signals to produce a rally suggests that the meme coin supercycle narrative may be losing steam, as investors prioritize assets with more tangible utility or stronger institutional backing. Sources suggest that the death cross on the weekly chart could usher in a period of prolonged consolidation or further decline that could last well into 2026. Furthermore, the halt and burn activity implies that the ecosystem's internal drivers are currently insufficient to offset the external market pressures. Analysts point out that without a significant increase in Shibarium adoption or a major new partnership, Shiba Inu may struggle to decouple from the bearish trend of the larger market. The implication for holders is that the era of rapid speculative gains may be giving way to a more mature and challenging market environment where technical levels and on-chain health are scrutinized more closely than ever before. Despite the challenging price action, the Shiba Inu community remains one of the most active in the digital asset space. According to social media trackers, the Shib Army continues to advocate for the project's long-term vision, though the tone has shifted toward a more defensive stance. Analysts note that developer hints from figures like Satoshi Kusama have focused on the ongoing expansion of the Shibarium network and the integration of new decentralized applications. However, community forums show a growing frustration with the lack of price response to these developments. Sources suggest that some prominent community members are calling for more aggressive burn strategies to counteract the current stagnation. On platforms like X and Reddit, the reaction to the weekly death cross has been mixed, with some viewing it as a buy-the-dip opportunity, while others warn of further capitulation. Community trackers show that while social engagement remains high, the sentiment score has dipped into the fear category for the first time in several months. Developers have urged patience, pointing to the long-term roadmap that includes further decentralization and the launch of new ecosystem components, but the immediate focus for most participants remains the precarious state of the token's market value. Looking ahead, the short-term forecast for Shiba Inu remains cautious. Over the next week to 1 month, analysts note that the primary level to watch is the 715 units support. If this level holds, we could see a period of sideways trading as the market attempts to find a floor. However, if the price slips below 700 units, a quick drop to the 600-unit support is highly probable. In the long term, spanning the next 3 months to 3 years, the outlook is more complex. According to reports, Shiba Inu's recovery will depend heavily on the broader market's ability to stabilize. If Bitcoin can recover from its current slump and move back toward its previous highs, Shiba Inu could see a renewed interest from speculative buyers. Analysts suggest that the key to a long-term reversal lies in the successful implementation of the Shibarium burn portal and the growth of the SHIBASWAP ecosystem. What to watch specifically are the whale movements on major exchanges like. As per on-chain data, top traders have maintained their long positions despite the recent dip. suggesting that institutional-grade players may be waiting for a definitive bottom before adding to their holdings. Any significant movement from these large wallets could provide the first signal of a potential trend reversal. In the interest of journalistic neutrality, it is important to consider both the risks and the potential silver linings in the current Shiba Inu market. The primary red flag is the weekly death cross, which historically has preceded significant periods of underperformance for many digital assets. Furthermore, the total halt and burn activity is a concerning development that suggests a lack of organic utility within the ecosystem at current price levels. Analysts note that the risk of further downside remains high as long as Shiba Inu continues to trade below its major moving averages. On the other hand, a neutral insight suggests that the current oversold conditions could eventually lead to a relief rally. The fact that whales are not yet liquidating their positions is a potential sign of hidden strength. However, investors should be aware that Shiba Inu remains a highly volatile asset, and its price is heavily influenced by social media sentiment and broader market trends. The risk of a death spiral, where falling prices lead to further decreases in burn activity and community engagement, is a scenario that cannot be entirely ruled out. Caution is advised, and participants should closely monitor the 600 units support level as a final line of defense for the current market structure. The charts do not lie, and right now, they are telling a story of caution. The bullish cross has faded, and the road ahead for Shiba Inu looks more challenging than ever. But in the world of crypto, things can change in a heartbeat. Will the bulls find their footing, or is there more pain to come? Only time will tell. Stay tuned as we continue to track every move. The day is over now. Remember to give it a big thumbs up. To see our most recent material, share it, and subscribe to the channel.